What up you guys, this is your boy Kadarains FX. Welcome back to my YouTube channel and a brand new video. Welcome back to the Playbook course, and today we are diving into the final piece of the puzzle, the breakout strategy, the move that ties everything together. This is where the setup starts to make sense, where timing meets precision. I'm going to break it down step by step so you can use it immediately. Let's get into it. So let me go right there on a clean fresh page and select my text and write the playbook. Right, I'm just gonna have to change my font a little bit. Okay, so this is the playbook, right? And the playbook, it comes in 3 setups, right? But basically or fundamentally, it's all coming from the breakout strategy, right? It's all coming out from the breakout strategy. So I'm just gonna have to write the breakout strategy, right? So the first thing that I'm gonna have to write is simply wait for a bearish candle to close below a support. Then number 2, simply wait for a bullish candle to close above a resistance, right? So fundamentally that is it. So let me just draw and show you guys. I'm gonna have my resistance and my support. So let me just label my resistance. Let me select my text and write resistance at the top, that's the ceiling, right? And down I'm gonna have to select my text and write support. So my resistance at the top and my support at the bottom. So I'm just gonna have to select first. I'm gonna start with the bearish version, right? So let me just write one there. Let's say we've got a bearish candle, it closes like this, then the next candle closes below a support. So basically that is a breakout candle, right? Let me just put an arrow there. That is my breakout candle, right? So simply that is the breakout to the downside. Let me just label breakout, right? That is the breakout candle. Then for number 2, we've got the bullish version of the breakout. Let's say for example we've got the first bullish candle, it does something like this. Then the next bullish candle, it comes, it breaks the highs. Then the next bullish candle, it breaks above a resistance. So let me just color the bull candles. So fundamentally that is what I refer to as the breakout. So the third candle, the last candle, that is the breakout candle, right? So simply that is it. You simply have to wait for a bearish candle to close below a support and a bullish candle to close above a resistance. So like I said, the breakout strategy comes in 3 setups. So this is going to be setup number 1. Let me just change the font, right? So what happens is this is a normal breakout, right? The price breaks above a resistance, right? This is the bullish version of the setup number 1. Price breaks above a resistance, right? So for the entries now, the first entry is to place a buy stop at the break of the highs, right? Then number 2, the entry number 2 is to enter at the flip of the candle. Then the last entry is to enter at the major area, right? So this is the setup number 1. I'm just gonna have to come here and draw the setup. So I'm just gonna have to come here and draw what I mean. So let's say for example we've got a resistance right there and a support right there. So the setup number 1, it goes like this. Let me label the resistance right there and the support to the downside, right? So this is the illustration of the setup number 1. Let me select my brush. Take it for example, we've got a bull candle, then the next candle, it does something like this. So remember, that is what we referred to as the breakout, right? That is the breakout candle, right? That is the illustration of the first setup, right? So the idea now or the entry is to place a buy stop at the break of the highs of the previous candle, because when a candle forms, it does something like this. It first comes down, then wait, it is now flipping to go up. That is where you want to be placing the buy stop. So it will be something like this. So let me just select my text and say buy stop. So the buy stop will be right there at the break of the previous highs of the previous candle, right? So that will be the buy stop. Then the entry number 2, that will be the flip of the candle. Fundamentally, the flip will be the close of the previous candle, right? So that will be the entry number 2. Then the entry number 3 would be to enter at a major area. Take it for example, if our price comes down to these areas, it will be the areas of interest. That is where you want to be entering your buy position by market price, because the candle will be something like this, right? It will be something like this. Then it will be having a wick. So you can also refer that to as the wick entry. So that will be the major area. Let me just write the major area. So you want to be opening your position or entering your buy position right there at the major area, right? So the first entry is the buy stop, the second entry is the flip, then the third entry is the major area. And I'm just gonna have to refer that to as the driver candle, right? That is your trade candle, that is your driver candle, that is the candle that you wanna be trading into, right? So that is the normal breakout. Price breaks above a resistance, then you have to wait. You have to wait for price to first come down. Then when it's coming up, you place a buy stop at the break of the previous candle highs. So that will be the breakout candle, right? Let me just label the breakout candle, right? That is the breakout candle and the driver candle. So we have got the breakout candle and the driver candle, right? So that is the setup number 1. So let me just go right there on the charts and show you guys what setup number 1 is on the charts. And let me find a perfect example. Right there. So first thing, I draw my resistance. Then the second thing, I draw my support, right? The area between the support and resistance is a range, and right there is my breakout candle. You can see that that candle broke out of the range, and what happens next? Price went up, right? So that was the breakout candle. Let me just label the breakout candle. That was my breakout candle, right? So I'm just gonna have to put it right there. Then that candle was the driver candle. Let me just select my text and write the driver candle. So you just have to draw your support, resistance. You find the breakout candle, then you label the driver candle, and the driver candle is the one that you want to be trading, right? So basically that was it on setup number 1. Price breaks above a resistance, then we are expecting price to continue going up. So I think we are done with setup number 1. I'm just gonna have to remove the drawings and write setup number 2, right? So for setup number 2, right? Setup number 2, price breaks above a resistance, right? Then after price breaks above a resistance, the next candle closes bearish, right? The next candle closes bearish, but above the resistance or respecting the resistance. So price breaks above the resistance, then the next candle closes bearish but respecting the resistance. Then the entry is to place a buy stop above the previous candle high, right? You want to be placing the buy stop above the previous candle high. So let's say, for example, we've got a resistance and a support. Let's say, for example, we've got a resistance and a support. Let me just label the resistance. That's the resistance always to the upside. Then I'm just gonna have to label my support to the downside, right? So on the brush, let's say, for example, this candle, it breaks above a resistance, right? That is the breakout candle. But the next candle, let me select the color to red. The next candle, it closes bearish but respecting the resistance, right? It closed bearish, but respecting the resistance, we are likely to go up. So you want to be placing the buy stop at the break of the highs, right? That would be your entry, right? That is the entry buy stop. Let me just label the buy stop or the at the break of the highs, right? That is your buy stop, and that is your breakout candle, right? Sorry, that is your driver candle. So on this setup, you don't need that much of a big wick. You just need a small wick and you'll be good to go with a small wick, right? On the driver candle with a small wick, you'll be good to go. Why? Because the wick was already made by the previous bearish candle, right? There is market structure on here. Higher highs and higher lows have already been made. So for example, now going on the illustration, let's say for example, going on the illustration, a perfect market structure has got high highs, high lows, high highs, high lows, and high highs, high lows. So I'm just gonna have to label, select my text and label these are high highs and high lows and higher highs. Like this is a bullish market structure, right? So let's say for example we've got a perfect market structure like this. What this is simply doing is like so. Let's say we've got a resistance at the higher high, right, and a support right there at the bottom at the high low, right? So I'm just gonna have to label my resistance. Then next I'm just gonna have to label my support. So simply on the candles, what this is happening, this is like so. A candle is simply doing like this, right? A bullish candle, it opens and closes like this, right? It opens and closes like this. Then the next candle, that bearish candle, what it is simply doing, it is coming down to create a bottom wick, right? In other words, it is making a higher low, right? Remember, higher highs then higher lows. So that wick is simply a higher low, right? It is simply making a higher low for price to continue to go up. So price, it breaks above, then the next step, it has to make a higher low, right? So that is why others refer it as to the breakout and retest strategy, right? So I'm just gonna have to label that wick the retest. I'm gonna have to call that wick the retest. So that is just a retest being made. In other words, that is a higher low being made in the market structure, right? So then the next candle, that higher low, that is the same as that retest candle, right? So let me just change the color to white. That high low is just the same as the retest candle. It is just a higher low being made, and maybe on other time frames, it's just a retest being made, right? It's just it will be like a 15-minute candle closing like that, right? So that was entry number setup number 2, right? Now we go on setup number 3, which is the last setup, and I'm going to call this setup the news setup, right? That is my news setup. So what happens on setup number 3? We've got a resistance, then we've got a support. So what happens is like this: price breaks above a resistance, then it continues to go up, but the candles will not be having bottom and top wicks, right? The candles will be just flying. They won't be having top and bottom wicks, right? And we talked about top and bottom wicks, right? These are higher highs and higher lows being formed. So if a candle doesn't have a top, a bottom wick, that means there is no market structure. There are no higher highs and higher lows being formed on these candles. So what this candle is simply doing is it's going like this, right? It's just doing like this. It's going up. There are no high highs and high lows. That is an illustration of a market structure, of which a healthy market structure, it will be high highs, high lows, high highs, high lows, and so on, right? So for the new setup, if candles are going up or are going down without top or bottom wicks. On news, you have to know that on news, when news comes up, the next candle is likely to spike down. So let me just draw a candle, change the color to red. Is going to spike downwards. Why? Because it will be correcting the market structure, right? It may not continue to come down, it may just spike down, then continue to go up with the trend. But on news or during news, expect a spike down, right? Expect a spike down during news, because price will be correcting the market structure. So if price spikes down heavily, then it starts to come up, right? So that is the news strategy. So if you see a candle coming up with no top and bottom wicks, that means there's no market structure. So during news, price is most probably going to correct that market structure. So let me label this. Let me create a rectangle like so. That is my rectangle, and I'm just gonna have to label this market structure as to this one, right? This is the market structure which is not healthy, right? This there is no market structure right there, right? There is no market structure. Let's just call it the shaggy market structure. Then that's it. Then for us to have a healthy market structure, right, price should be doing something like this. So let me just draw the candles of a healthy market structure. Let me just go right there and select my brush and write the candles and draw the candles of a healthy market structure. So a bullish candle, change the color to blue. A bullish candle, it opens and closes with a top and bottom wick. Then the next one, it opens and closes with a top and bottom wick. Then the next one, it opens and closes with a top and bottom wick. So the wicks, remember the wicks, these are just high highs and high lows. So this market structure now, this is a healthy market structure, is now this market structure. Let me just change it to green. To green. Let me just change it to white. I think white is the best. Let me just choose the color white, right? I'm just gonna have to change it to white, right? So this market structure is now the healthy market structure, the non-shaggy market structure, right? This is the market structure, the perfect market structure that we wanna be trading into, right? So these are the first market structure. I'm just gonna have to draw an arrow and put it right there, right? Okay, let me just select text and write no market structure. So this one, this drawing has no market structure. You want to be avoiding in this market structure, and during news you want to be watching out for that spike. So this is the same market structure as this, right? And this one, this is a healthy market structure. I'm just gonna have to select my text and write market structure present, right? There is market structure right there, right? So that's the market structure. I'm just gonna have to draw and label the arrow. That is the market structure, right? Market structure is present on this illustration, and that is a healthy market structure, right? So I'm not gonna show you guys the perfect example on this entry setup, the news entry setup. So I'm just gonna have to go and delete everything, right? So now the big question is, when do you trade? So number one, you want to be trading in the London session. Then number two, you want to be trading in the New York session. So the big question is why do you want to be trading in the London session and the New York session? Why, right? That is the big question. The big question is because there is volume, right? The key word is volume. You want to be trading in these sessions where there is volume, right? When there is volume, that is where price is moving so fast, right? Ranges are getting filled up. So that was the end of the the video. Right guys, that was the end of the breakout video strategy. I'm going to leave the link in my description if you guys want to open a trading account with Deriv. I'm also going to leave the link in my description if you guys want to log into my signals group. And peace out. Kada reigns,